Tech Mahindra. Now, analysts expect a flat revenue, but healthy margins growth are likely to boost net profits. Analysts are pegging net profits for Q3 FY24 at a growth, a QOQ, quarter-on-quarter growth of 54% at 763 crores. Revenues are expected to grow only marginally at 0.72% quarter-on-quarter, at pegging them at 12,957 crores. EBIT margins are likely to rise 6.98%, improving only 228 basis points sequentially. In turn, company EBIT is expected to grow to 904 crores, rising 49% quarter on quarter. As we speak, the stock today is up around 0.76%. What do you make of Tech Mahindra? What are you expecting, and how do you advise investors to approach this stock?
So we don't have a coverage on Tech Mahindra, but we do have coverage on other IT stocks. And my sense is that all the services IT company are tend to follow, Infosys, Wipro, and TCS results. So we might see some sequential revenue decline because remember in Tech Mahindra, 60% of the revenue comes from the telecommunication or the telecom segment. And that has sort of seen sort of persistent softness in the demands. The EBITDA margins which you talked about at the start, I think those EBITDA margins are sort of one-off kind of increase in the margins because company took a lot of business restructuring. In Q2, the company had cut its America business into 3 units, while it consolidated its Europe telecom and non-telecom business into 1 unit. Overall, also, Asia Pacific and the Japan business were under a single management, while India was carved into a completely different business. So there was a lot of restructuring which happened, and as a result, the margins for on quarter-on-quarter basis are showing some sort of improvement. But these are one-time cost. So the soft growth may actually offset this one-time EBITDA margin gain. Overall, I think the Tech Mahindra result should follow on the same path that TCVs will be sort of flattish. The growth margins for the next financial year should also be sort of flattish, at least in the first half. And then we'll see how much once the rate cut happens in Fed, then we'll see how much of TCVs are increasing, the total contract value for the company. And then, one can prioritize according to that in the portfolio.